I think I had the stigma that a lot of people have that syndications are just for the wealthy, that it's hard to get in. No, this is very feasible to do, as easy as the single family side, the active side, but a lot less active.
Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right, welcome back to the Gentle Art of Crushing It Passive Investing Edition. My name's Randy, and I'll be your host today. And we have got just a fantastic guest with us today, Chad Ackerman, who is the founder or co-founder of Left Field Investors. Chad, welcome to the show.
Thank you. No pressure with that intro. Hopefully this is quality stuff that we got today. But thanks, Randy. I'm really excited to be on the show today.
Awesome. Glad you're here. So why don't we start this off like we always do? Can you tell us a little bit about your background and maybe your journey or your path to passive investing?
Yeah, no, that's great. So I've been a career W-2 guy. I grew up in Ohio, Central Ohio, lived there most of my life, but moved away to Raleigh, North Carolina for a little while and bounced back after having kids. But I've been in human resources all my career, been tied to sales compensation design work. So loved working with the sales teams, but didn't want to be one. I like being on the side of quota that I'm on, if you will. I like handing out the quota instead of having to go get it, sort of thing. But
So you were the guy that me and my sales fellows were wanting to get in front of and influence all those.
You
years,
either
right?
loved us or hated us. That's 100% right. You're exactly right.
I love it.
Yeah. So I did that for a long time. I really enjoyed it because I did love working with the sales teams. I love the creativity with it because there's no perfect plan. There's no 100% this is going to work for everybody kind of thing. I called that job security. They were always going to need me. I was always going to have to go back through things. But, I had been doing it for a long time. I switched jobs here in Columbus. I had been working at a company that was 2 miles away, and I switched to a company that was downtown. So I had a commute, and somebody at the job whispered in my ear about looking at multiple income streams and mentioned real estate. And I was like, oh, that's interesting. I actually have a minor in real estate in my college degree. And I'm like, oh, I should, maybe look into this a little more myself. So I started listening to podcasts, found Bigger Pockets, got excited about that, started reading some of their books or doing Audible books on my way to work as well. That it really just fed the beast. Like I got bit by the bug. Like, this is something I want to do, but I couldn't, make up my mind on what shiny object looked good to me. So I didn't pull the trigger on anything for a long time.
And how long into your career were you at this time? Was this 10 years in, 15, 20 years in?
This is like late 20s or almost 30 years into it. So I was in my late 40s when I finally, this triggered with me that, hey, this was an avenue to look into that could be a second income stream, potentially a primary income stream kind of thing. So I was later in years, if you will. I wasn't the spring chicken necessarily, but
I was the same thing. I didn't buy my first real estate investment until I was 40, almost 45 years old. Mm-hmm. So I think we were on similar
about the same boat. Yep, absolutely. Yeah.
Okay.
Which just shows, it doesn't matter how old you are, you can still look into this and make it work. There's benefits to waiting till your 40s that I'll get into because, but I looked around. I looked at a lot of the active side of things. There was a local meetup here in Columbus that I went to, heard speakers very focused on the active side. But the last one I attended, Jim Pfeiffer got up and spoke, and he talked about how he left his W-2 because of investing in the passive side of things. And I was like, the switch flipped. Like, this is the shiny object I've been looking for. I think I need to meet this guy. So I talked to him afterwards. Turns out we live in the same suburb of Columbus. So we were able to get together for a beer and learn more. And I fell in love with it. I'm like, this is like, I always struggled with how I was going to scale on the active side and really make it work and being a W-2, work full time. I've got busy tax seasons, if you will, that I'm like, I don't know. What do I do if I got a construction work going on or a tenant I got to kick out or whatever, and I'm busy as can be. So I always struggled with how I was going to make the active side work. When I found the passive side, it really just clicked with me. So I started chasing that shiny object, and I've been doing that since, basically.
Are you interested in real estate investing but don't know where to get started or think you don't have the time or money? Are you stuck in your W-2 because the golden handcuffs make it hard to walk away? If this sounds like you, check out impactequity.net and schedule some time to talk with the founder, Randy Smith. Randy went from massive income to leaving his W-2 through passive income, and he can help you do the same. www.impactequity.net.
So that's an interesting story too. Like most of the people that I talk to, they start in single family or they start doing something. Interesting that you had a real estate focus back in your college days and didn't look at it for 30 some odd years. So
exactly.
Looking back at it now, do you think? Because I'm intrigued with this, like jumping into passive investing as well. Do you feel like that was an advantage or a disadvantage, or does it? What type of advice do you give new investors when they're just getting started?
That's fair. I think it's very individualized. I think it's based on, the person's risk capabilities, their comfort level, their education level with it all. I think I had the stigma that a lot of people have that syndications are just for the wealthy, that it's hard to get in. Jim, he used to be an educator. He did a good job of educating me. He basically explained it like, well, think of it this way. What if you found a single family home that was off market, that was very distressed? You picked it up for 25 grand. You had to put another 25 grand into it to fix it up, and then you could sell it. He's like, so you got 50 grand in. He's like, well, I can take that same 50 grand and I can go get into a multifamily deal that may have the same rate of returns or close to it. It just is spread out over more time. That I'm like, well, that's been my biggest issue. It's time. I don't necessarily care if I can still do this and not lift a hammer, not go screen a tenant, whatever the case, then it's worth that time to me. I know I'm still going to get to my goals on its own and I can watch it, but it's safer than the stock market in my mind too. So I don't want to give Jim too much credit. It'll make his head too big, but he definitely influenced me a lot on this path of, no, this is very feasible to do, as easy as the single family side, the active side, but a lot less active too. And then honestly, the big switch was learning about the tax benefits. That once I understood that, I'm an analytic at heart. That's what I do with my job. I had my spreadsheets studying all this, and I showed him my numbers, and he's like, oh, well, you gotta go in and take out this tax line. You're doing way too much money aside for tax on this, because you're going to be able to defer that. And I'm like, well, what? Like that takes, 25, 30% out of my numbers. Then that's huge. So that was a big eye opener then to me.
Yeah, no doubt. So a lot of really good information in that. And I think it's interesting that we have this mindset when we first get started that we've got to jump into something smaller because smaller is easier, and let's be a little bit more involved in the business versus hiring the experts to actually do it. Because I think in my mind, I was thinking, I can't really play in that space because I'm going to have to pay somebody to be an expert, and that'll come out of my return somehow. Yeah. Or it's just some other unachievable realm that I just don't get to play in because I'm just a little guy who's doing a W-2. So
right.
It's a good message that you're sharing that, like literally I could have fast forwarded and skipped 3 or 4 years of like blood, sweat, and tears, stubbing my toe, like literally stubbing my thumbs and flying all over the country and doing all of those things, and just immediately taking that first 50 grand that I put into my first single family home.
Yep. And by no means did I have that as a strategy. I stumbled into it myself, but it's, this is, you'll hear me say this a lot today. This is the benefit of the community and getting educated on this and hearing more broad information about all this space to make your decisions. And once he explained it in that meetup, and then I met with him, I'm like, yeah, this is definitely what I want to do. And I've been very aggressive in it then ever since. So it's been a journey for sure.
Well, let's talk about that then. You
Mhm.
said you've been very aggressive, and I look at my portfolio and I would say I've been aggressive as well. Um, so tell the audience if you can, like what did first, let's take a look at what that first investment looked like.
Mhm.
But then ultimately, I want you to kind of walk us through like that phase of growing your portfolio passively and what those strategies look like and the
Sure.
timelines.
Yeah. And I'll disclaim that I never sell my path as the path that everybody should follow. This is a path that I took, put it that way, based on my situations. But no, my first one. So I never did buy anything in the single family realm. I never was an active investor. I watched a lot, tried wholesaling a little bit, but that didn't go. So I flipped right into it. And the very first deal I bought was a 17-story building in downtown Cleveland, Ohio. That was an office building, historical landmark. Rockefeller built it. It's got Rockefeller written on it. That they're converting to a multifamily, that they're going to put residential in there. And so by no means do you have to start in the single family world. You can jump to the 17-story building, which is what I did. Do I recommend it? Well, you got to be comfortable with it, I guess. But I had a group of people that were looking at it as well, that helped me kind of analyze it. I liked the numbers on it, and I jumped in. Now, the lesson I learned out of that is know your goals ahead of time. I like the deal. I'm still in the deal today. It hasn't closed out yet or anything. They haven't sold it. But my goal really was to get out of my W-2 and build some cash flow to replace that income. This deal hasn't cash flowed a thing for me since 2019. So I like the deal. I think it's been a great deal to be in still, but it didn't help my goals, which were to get out of my W-2 right now. So that was my biggest lesson learned out of that. Still happy I'm in it. It's still going to be a fantastic deal, I think. But it didn't really help me. But I pivoted quickly then to realize, hey, this isn't exactly doing for me what I want it to do. I need to look at some other things that will build wealth, but also give me cash flow, since that's what I was really striving to do. Um,
That's a really good point to make and something to really kind of focus and highlight on because I made the same mistake with my first passive investment. I put 100 grand into one deal. I actually did it with an IRA, so I didn't create
mhm,
any livable income whatsoever.
yeah,
It was money that was going back to an IRA. I put it all in one deal, one operator, one asset class, no diversification at
yeah,
all.
yeah,
And fast forward, it's a great deal. It's a great deal had I put it in today, but at the time, maybe it wasn't the best. But I always say that, that the power of that first deal, you hear a lot of people talk about that. That first deal you did on the 17 unit in your
yeah,
hometown by Rockefeller, had
yeah.
you not done that, you wouldn't be where you are today. So,
100%.
um,
Yep. Yep. It was a good lesson learned. Again, it's at least it wasn't a mistake. It wasn't like it was a operator that ran away or took my money or the place was swamp ground, any story like that. I think it'll still be a home run down the road, but it wasn't really aligned with what I needed at the time. But that allowed me then with number 2, 3, 4, so on to really focus on what my goals were. And it got me excited about it. It got me into it. I took action on that first one, which is so hard to do, I think, for most of us. So just taking that first action, it loosened things up to then go look at the second, third, so on. And my journey, I got bit by the bug again that like, no, this is it. I like this. I looked around. I had set a goal that I wanted to get out of my W-2 within 3 years. And I looked around and I'm like, well, the only thing that felt like to me that this was going to take was a lot of capital. Where do I have a lot of capital? Well, it was in my 401k. So in 2021, January 2021, I liquidated my 401k, took everything out, paid the tax, paid the penalty, and moved it all into real estate and found the triple net lease world, found multifamily, found some mobile home park that really became my discipline to stick in and focus on and have cash flowing out of triple net lease and double net lease deals, but have wealth building out of the multifamily that were, equity improvements and so forth that I really liked the balance that gave me for what I was trying to do on my own goals and try to migrate towards getting out of my W-2.
I love that. I love that. So you're very, very clear with what you're trying to achieve today. You pick and choose operators, asset classes, investments that tie to that directly. Now, I love the fact that you said that you actually cashed out your 401k, because this is something I've been talking about and thinking about myself for, I don't know, maybe the last year or so. Because I'm of the mindset that I think it's actually I think it's a terrible thing that we're teaching young people coming into the workforce to delay paying taxes when you're probably in the 10% tax bracket.
Right.
And let's kick that can down the road. And quite frankly, if you're doing the right things, you're probably going to be in the 20, 25, 30, 37% tax bracket, right?
Exactly.
So talk me through your mindset around that and kind of that thought process that you had to go through to decide, like, does this make sense or does it not make sense for you? And of course, it's going to be unique to everybody. But
it is absolutely, it is. No, in my situation, the biggest thing was the scalability, that I saw that as a way to scale with what I wanted to do. I trusted this space a little bit more than I trust the stock market, because I'd watched my my 401k go up and down drastically through different market shifts and everything else. And I knew real estate, having a history in it, I knew real estate didn't usually jump that way. 2008 might be a different story. Actually, the spike we've had up the last several years is a different story too. But for the most part, I knew I could count on it much easier. So if and when I ever needed to get out of some of it, I had greater faith that it was going to be on an upswing versus my 401k. I had to catch it in the right market. So that was a big piece of it. Really what put me over the top, again, talking to Jim about the situation, he had mentioned that, regardless if you cash out now or you cash out when you're 65, you're going to pay tax on those dollars. So the tax almost became a non-issue to me, because you're going to do it. Now, are there ways to spread that money out, reduce your income so you are paying a lower tax bracket? Absolutely. That's the case. But in the grand scheme of things, I thought, well, no, if I pull my cash out when I'm 65 and I still had some income, I'm going to pay that higher tax bracket anyway. The only real difference was the 10% penalty. And I thought, well, I was 50 at the time. I thought, if I pay the 10% and I take that money out, I get out of my W-2, I'm living the life I want to live that many more years than waiting to start all that when I'm 65. And that was worth 10% to me. And I knew over the next 15 years, I can make more than 10% on that money. So I trusted that as well, that it as I step back and noodled it, and my family, my friends all did think I was crazy, like, are you sure? And I'm like, well, I can always go back. I can always start fresh and whatever the case. But at the end of the day, I knew putting in real estate, as long as I have vetted the operator well, I'm not going to, even if the place burns down, there's still value in the land. I'll still get something back. So I'm never going to lose it all. So whereas in the stock market, I'm like, well, it could crash and literally I could lose all my 401k. So all those things just added up to me of like, okay, if you really want to get out of your W-2 and this is the route you think you're going to do, pull the trigger on it and go. And I've had 3 deals go full cycle on that money already, that I've been very happy with. I jokingly say, ask me in 5 years if it was a good idea or not. But today I don't regret it. Let's say that. So it worked. It helped me.
I love it, Chad. That is such an amazing story and inspiring to me, because I'm right there thinking that same thing. And I keep investing dollars through a self-directed account going into these deals. And, you got UBIT and all of those other things that you got to worry about. And I get really excited on the first of the month when I see all of those deposits hitting my account.
Right.
But then when I see them hitting my self-directed account, it's just like, it's kind of play money anyways. So
right.
I love that mentality. Yeah.
Yep.
So you've got a very clearly defined strategy that you're leveraging and you're putting your dollars in. The 401k strategy is a different one. My understanding, you've decreased, maybe not entirely left your W-2, but have decreased your dependence on that W-2 to a certain extent, right?
Well, it's good timing. Since you and I talked last, I actually have resigned from my
Oh,
W-2,
yeah.
and tomorrow is my last day, actually. So yes, we are first.
Congratulations.
Thank you. Thank you. So I am effectively retiring from the corporate world. I'm going to work for Left Field Investors full time, which is our group. But
Sure.
that's a passion project that turned into a business. So I'm okay working for it for several more years, if you will. So yeah,
Yeah.
there's the breaking news. I have and conveniently it's a little more than 3 years, but it helped me meet my goal of getting
Okay.
out when I set time to do. So I'm very happy to be able to do that and happy to report that to you today. There,
That is so
you get the
exciting.
hot
Yeah.
off the presses.
Yeah. Hear it here first, right?
Here
It's
first. That's right.
General Art of Crushing It. And so when you first set out, you set this goal of, I want to leave my W-2 in 3 years. Everybody thought you were nuts. Like, why
Right.
would you do that? I suspect you've been doing this for 30 years. You're probably making good money. You're working for an awesome company.
Right.
Why would you ever leave? And then you cash out your 401k as well. So like people are just throwing their hands in the air saying, this guy's nuts. Right.
Right.
So that's awesome.
I said my strategy was burn all the ships, and then you got to move forward with it. So
Yeah.
here we are.
Well, congrats.
It's all timing, right? It's all situational. I've got two kids. They're teenage. One's in college. He's a junior in high school. I've got everything set for them for college and everything. Everything was kind of in place. Then I'm like, well, you know what? I'm at a point in my life I can take some different risk for
Yeah.
me and do what I want to do. That it just kind of laid itself out there that, if there was ever a time, this seemed like a good time to do it. So it's, again, that's why I say it's not everybody's path. I don't encourage anybody to do exactly what I did, but if I can be an example of somebody that did this, so far so good for what I've done anyway.
I love it. I love it. Well, yeah. And I mean, that's the goal of Impact Equity. That is my goal of doing this podcast, is trying to teach and educate and inspire folks like you and I that are stuck in the W-2 and they're relying on their stock market 401k portfolios. And, for those folks that are kind of sitting on the edge and they're thinking about, like, maybe I should dip my toe in this. We're creating some community here, you and I in the audience, but I know you talk about community a lot. Can we talk about what you guys are doing at Left Field, which is just an amazing, amazing resource to the passive investors?
Yeah, no, that's great. No, so Left Field Investors is a community that we started with fully the intent of it was going to be to have 10 or 15 people around a table in Columbus, Ohio. And our first meeting was scheduled to be March 18th of 2020, and the world shut down on March 13th or 15th of 2020. So we never got to have it, right? So we got put onto Zoom like everybody else and communicated through Zoom, had our first meeting, and it allowed us the opportunity to invite other people that we knew were interested in this as well to come to the same kind of discussion. Our goal was just to have a network, just have a community, be able to talk about this stuff. We felt like there was a big gap in the education about teaching you to be a limited partner investor passively. There's a lot to teach you to be active. There's a lot to teach you about being a general partner if you want to be. There wasn't a lot to teach you about being an LP. So we formed this group selfishly just to educate ourselves better on how to invest in these deals. And it really spiraled, honestly. As word got out, we started going on podcasts, and people kept finding us. And because it was all Zoom, we could just keep adding people to the community to where now, 3 years later, we have around 1,250 people in the community now. And it's just been really interesting. And it has always been a hobby, if you will. So we never viewed it as a business when we started it. It was a culture we were trying to build and just come share information. We were all about educating and networking. And then as the company grew or the business grew, we realized, well, we're now a target for general partners to come want to meet our community. So we became education, networking, and then we became deal flow as well. And so now we're able to introduce a lot of different sponsors to the community just to get them exposed and have that diversity in asset class and operator so that they can make decisions on who they want to invest in. Because you can't go Google, sponsor for a limited partner investor. You can't find that much. You'll find something out there, but not that much. So we just wanted to build a community to pull that together. We don't capital raise. We aren't co-GPs. We're just about kind of playing the middleman between the limited partner investor and the operators that we find out there, so that the two can meet and make decisions if they want to invest together or not. So it's been a crazy journey, but it's been a lot of fun.
I love it. I've been listening to the podcast for, I think probably a couple of years now at least. And I joined the infield myself last year. I'm probably coming up for my renewal here any moment. And it really is amazing. Like, you guys literally you're a one-stop shop for a new passive investor, whether people are just starting the education process and like, what is this thing called passive investing? All the way up to the people, like, there are people in your organization, whether it be infield or co-founders, that have hundreds of limited partner positions in hundreds of different investment deals. So the knowledge and the experience and the advice that you can get from that group is just absolutely amazing. I'm a big fan, if you can't tell.
Thank you for that. No, thank you for that. And honestly, it's that diversity that makes the left field community the asset that it is to people. It's a combination of the newbie. We don't want the newer investors to be shying away. There's a lot of education material there. There's lingo just to learn, just the glossary, just to learn the words and how to speak the speak. There's tools to teach you how to calculate a deal and analyze a deal and so forth. And there's a forum to go ask your questions. But it's the combination of the newer person that's maybe asking the questions that the veteran wouldn't, and the veterans being there to answer when those questions come up, that I think makes the community really, really successful. And I'm 10 times better of an investor today than I was before we started this. Probably more than that. That's probably selling it short, to be honest with you. But the selfishness of us starting it to learn more ourselves came through. But I think it's awesome that we're able to help so many others learn about this space too. That's our big goal. We're trying to add more things, more master classes, just education, just to help people be able to find what they need on that space, as well as deal flow at the end of the day. So I'm glad you like it though too, Randy. We appreciate everything you've done for us too.
Absolutely. Yeah, no, I'm a big fan. We've had co-sponsored events together just recently here in Scottsdale. I personally have I found a tribe through your group that I invested in. I actually invested in another deal through Left Field Investors, and I personally am getting better returns from that investment through being a member of Left Field Investors than had I invested with that operator directly. So, that couple $100 a year that I pay towards to be like a premium member,
right,
I'm going to get back like 10x just because of that one deal. So it's just, and what I think I love the most about what you guys are doing there is, like, clearly you guys are working your butts off doing this. You're gaining from it, from the community you've created and the knowledge that you're creating. But you guys didn't start this as like a revenue generator or an income stream or anything like that. So you're putting all of this effort and energy and bringing these resources together because you want to do the right thing and help people, not because you're trying to get rich off of Left Field Investors.
No, our number one goal, we say with every decision we have to make, is protect the culture. We built this culture that's different than some of the other communities that are out there. And we understand that that's important. And that's a number one priority to us, is always make sure the culture withstands any decisions that we're making. Yeah, you're right. I mean, most of us were in W-2s, us founders, and Jim had a passive income going that he didn't need to worry about money from this, that really afforded us the ability to create a product that was just good for everybody to use, not necessarily something that we needed to make money off of. Now it's transitioned that we've gotten big enough that, the money coming in now helps us keep the lights on too. And it's, afforded me the opportunity to leave my job and go do this full time as well to some degree, but it's about the community. It doesn't work without the community that we've that has come about. I wouldn't even say we raised it. I mean, we've backed into this because people just found us. But apparently we've put together a product that people like, that they keep coming back, at least anyway. But it's a very engaged group. They're all like-minded. They're all laser focused, and that's what makes it work. Is they're all involved, which is fantastic. We love that about the group.
Well, very good. Well, let's do this. We're already, we're already
I'm all
almost
over the
at
place.
30 minutes.
Yeah.
I do. I want to find out what's next for you personally, Chad. What's next for Left Field Investors? What are you guys excited about right now?
Yeah, right now we're redoing a lot of foundation stuff. Again, we've grown and we've got to catch up everything to be able to build on. So we're in a big foundation push right now. Get our technology updated, get it more sustainable. Those things which will hopefully help us pivot and grow more in the future instead of having to keep slapping things together like we've done. Which is great to get to that point. And then we really want to get back into the educational material, start building out some masterclass materials and that kind of thing to help educate people more in this space and give them more resources to go find whatever it is they need. We know it's a broad spectrum, so we know there's a lot of room there. So that's the big thing for the near future, what we're trying to pull together anyway. Keep building that culture.
I love it. It. Well, let's do this. I do have a few kind of basic questions I like to ask at the end of all of our guests. So, what's other than Left Field Investors podcast and community, what one educational resource would you suggest to the newer passive investor who's really just getting started?
You've probably get this one a lot, but my favorite book was Brian Burke's book, The Hands-Off Investor. That is such a good guideline, teaches you so much about being able to analyze a deal. I think that one is fantastic, honestly. Other podcasts, I really got into the real estate radio guys. That helped me out a lot just to build knowledge, build some comfort with it, and the process and everything like that. I think they're another really good resource along the way.
I think so too. Awesome. Yeah, that was actually Real Estate Radio Guys were the podcast that I found my very first active investment from in the turnkey space. Which, anyway, we'll leave that story for another day, but I am happily a passive investor today. So
there you go.
And then kind of a fun one I like to ask, is there a recent bucket list item or some bucket list item that you're hoping to check off in the near future? And of course, leaving your W-2 is like the ultimate bucket list, but are there any other fun things you personally have planned?
So I'd mentioned my kids, I'm getting closer to being an empty nester. So the next big item on the list is retirement location. I say I'm lake shopping is what I'm in the middle of doing right now. So all of my vacations are around some lake somewhere across the U.S. that I can go spend some time there, feel it out, see if that's a potential spot to relocate to here in the next few years is my goal. So that's the big thing right now that's on the agenda.
Well, we got a couple of big lakes here in Arizona. So,
you do.
Come check us out.
Yeah, absolutely. Absolutely.
Very good. All right. Well, and how can the guests find you or get in touch with you if they would want?
Yeah, so one way you could go to our website at leftfieldinvestors.com, or you can reach out to me directly at chad@leftfieldinvestors.com. Those are the easiest ways.
Awesome. Well, Chad, thank you so much for being on the show today. It's you brought a tremendous amount of value. I love what you guys are doing at Left Field Investors and all that you're putting into the community. So thank you so much for today and everything you do.
No, thank you for all the kind words, the support, everything. It's been great. It's been great to get to know you more, Randy, and everything too. So we really appreciate that also. And we hope we keep turning out some value for you anyway. So
Awesome. Well, thank you. All right. And to the listeners, I will say, as I always do, just continue down that path of education and finding the inspiration to make that very first passive investment. Both Chad and I think, would say that we're very, very convinced once you make that first investment, you're going to be very, very pleased with the results, and you'll continue to do so more and more. So thank you all for listening today, and we'll look forward to hearing you or seeing you on a podcast in the near future. Thank you.
Well, there you have it, ladies and gentlemen, another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.